Welcome back, and let's chat commodities now, which have had a good day when it comes to the energy space and the metal space as well. Both these sectors are inching on the higher side, even as the US dollar as well is trading on a firmer note. Let's get in Kishore Narne of Motilal, Oswal, who joins us now to talk about strategies and levels at this point in time. Kishore, hi, good to have you. It's nearly a percentage point up when you look at the crude oil prices. While, of course, the OPEC cuts have been good and there is a talk of them getting extended and deeper, do you think that is what is leading to buying on all the declines that we see?
Of course, Manisha. I think OPEC compliance of approximately around 90% to the production cut, and also their commitment that shows their commitment this time to stick to the production limits, and also slightly now the non-OPEC the responsibility of implementing the commitment will fall on the non-OPEC countries as well, and that's where the slight non-compliance is coming. I think this announcement of almost 90% compliance would put more pressure on Russia as well to cut down on the production, which it has promised earlier, and the market is expecting that this cuts to be longer than what it was anticipating. So I think that's what pushing up the market in crude, and it continues to be bullish for short term. I would suggest to buy March contract around 3620 for today, with targets close to 3690 for short term traders.
Kishore, also, how are you looking at the metal space? Because today, of course, it has been all about steel, which has hit a fresh 52-week highs in the Shanghai market. The previous week had been strong as well. And copper, of course, continues to see very strong fundamentals.
Yeah, of course. Here the problem, especially in steel, is of course it's driven by the ban of import of coal from North Korea by the Chinese government, and then I think that's where it caught a big surprise. And secondly, as you know, in copper, even the Freeport McMoran mine in Indonesia, that's the second largest mine in the world, has announced force majeure today. Again, the second week of stoppage in Chile's mine, Escondida mine, is also again driving the prices. So the supply side threat is still there very much, and of course with the current supply destruction, 2017 will be the deficit year for copper. I think this is the first deficit year in 6 years after 6 years of surplus in copper. So of course that's where the prices have been pushed up over $6,000 on LME, which is a slightly psychological level as well. Though today US is in a holiday, but I think the domestic markets are going to be still positive. So we are suggesting to buy copper at around 400 with targets close to 407 for the day, with stop losses of around 397.5.
All right, Kishore, we'll let you go at that. Thank you so much for joining us. So it really is a buy call as of now that we see come in for many of those commodities. But moving on, Kamal Baheti, who is CFO of McLeod Russell, and DP Maheshwari, MD and CEO at Jayashree Tea.